Hello, everyone. So we got the Q1 2023 update, and I'll go through the document that Tesla put out before the presentation, and I think it'll sum it up pretty well. I'll just highlight parts of it for you. So here's the highlights. Profitability, 11.4% operating margin in Q1, 2.7 billion GAAP operating income in Q1, 2.5 billion GAAP net income in Q1, 2.9 billion non-GAAP net income in Q1. Cash, operating cash flow of 2.5 billion, free cash flow of 0.4 billion in Q1, 0.2 billion increase in our cash and investments in Q1 to 22.4 billion. It's a nice amount of cash to have on hand. Operations, Cybertruck factory tooling on track, producing alpha versions. Model Y was the best-selling vehicle in Europe in Q1. Model Y was the best-selling vehicle in the US in Q1. X pickups. And summary. In the current macroeconomic environment, we see this year as a unique opportunity for Tesla, as many car makers are working through challenges with the unit economics of their EV programs. We aim to leverage our position as a cost leader. We are focused on rapidly growing production, investments in autonomy and vehicle software, and remaining on track with our growth investments. Our near-term pricing strategy considers a long-term view on per-vehicle profitability, given the potential lifetime value of a Tesla vehicle through autonomy, supercharging, connectivity, and service. We expect that our product pricing will continue to evolve upwards or downwards, depending on a number of factors. Although we implemented price reductions on many vehicle models across regions in the first quarter, our operating margins reduced at a manageable rate. We expect ongoing cost reduction of our vehicles, including improved production efficiency at our newest factories and lower logistics costs, and remain focused on operating leverage as we scale. We are rapidly growing energy storage production capacity at our mega factory in Laythorpe, and we recently announced a new mega factory in Shanghai. We are also continuing to execute on our product roadmap, including Cybertruck on our next generation vehicle platform, autonomy, and other AI-enabled products. Our balance sheet and net income enable us to continue to make these capital expenditures in line with our future growth. In this environment, we believe it makes sense to push forward to ensure we lay a proper foundation for the best possible future. So what everyone was, the big number everyone was looking for, we see here, GAAP gross margin, 19.3%. So a little lower than expected, and 20% was the threshold, so we're below that, and the stock is falling as we speak, and we'll take a look at that in a bit. And yeah, directionally, it doesn't look good as we see from Q3 2022, we had 25%, Q4 gross margin down to 23.8%. So directionally, it doesn't look good, but still industry-leading gross margins. And revenues, automotive revenues up 18% year over year, but a decrease quarter over quarter. Total revenue grew 24% year over year in Q1 to 23.3 billion. Year over year, revenue was impacted by the following items: growth in vehicle deliveries, growth in other parts of the business, reduced average selling price year over year, excluding foreign exchange impact, negative foreign exchange impact of $0.8 billion. Yeah, foreign exchange always sucks. Profitability, our operating income decreased year over year, 2.7 billion in Q1, resulting in a 11.4 operating margin percent. Year over year, operating income was primarily impacted by the following items: growth in vehicle deliveries, despite margin headwind from underutilization of new factories, gross profit growth in energy business, as well as service and other. Those are both positives. Now the negatives: reduced average selling price year over year, higher raw material, commodity, logistics, and warranty costs, cost of production ramp of 4680 cells, lower credit revenue. Cash. Quarter end cash equivalents, and investments increased sequentially by 217 million to 22.4 billion in Q1, driven mainly by free cash flow of 441 million, partially offset by other financing activities, including debt repayments. So then we got the production numbers. One I want to highlight here is the storage deployment, which is the Megapacks. So in Q1 2023, 3,889 megawatt hours of deployment for the storage, which year over year is a 360% increase. We see that growing from Q1 2022, growing again in Q2, growing again Q3, growing in Q4, and now growing again Q1 2023. So pretty exciting watching the energy side of Tesla's business right now. It's really ramping up production. Lots of Tesla locations coming online. Mobile service fleet is increasing. Supercharger stations increasing. And supercharger connectors increasing. Production capacity, a little bit of an increase for Berlin. Last quarter they said 250,000. Now it's 350,000. And then they got their market share of Tesla vehicles by region, US and Canada, almost 4% now. And I believe this is overall sales of any kind of vehicle. In Europe, over 2%, and China, around 2%. Autopilot and full self-driving, big one here, the cumulative miles driven with full self-driving beta, increasing exponentially, which for AI developers, they know it's all about data. So this is basically the data increasing, which is needed to potentially solve full self-driving. So good to see that continuing to increase. Here's the energy storage highlight. Energy storage deployments increased by 360% year over year in Q1 to 3.9 gigawatt hours, the highest level of deployments we have achieved due to ongoing megafactory ramp. The ramp of our 40 gigawatt hour megafactory in Lathrop, California has been successful, with still more room to reach full capacity. This Megapack factory will be the first of many. We recently announced our second 40 gigawatt hour megafactory, this time in Shanghai, with construction starting later this year. And yeah, I did a video on that. Solar deployments increased by 40% year over year in Q1 to 67 megawatts, but declined sequentially in the quarter, predominantly due to volatile weather and other factors. In addition, the solar industry has been impacted by supply chain challenges. Services and other. Both revenue and gross profit from services and other reached an all-time high in Q1 2023. Within this business division, growth of used vehicle sales remained strong year over year and had healthy margins. Supercharging, while still at a relatively small part of the business, continued to grow as we gradually open up the network to non-Tesla vehicles. Outlook. We are planning to grow production as quickly as possible in alignment with the 50% compound annual growth rate target we began guiding to in early 2021. In some years we may grow faster, and some we may grow slower, depending on a number of factors for 2023. For 2023, we expect to remain ahead of the long-term 50% compound annual growth rate, with around 1.8 million cars for the year. Yeah, this is where a lot of analysts get confused. They only look at the previous year and say, well, it has to be 50% above the previous year. No, it's an average that they based off of the 2020 year, which was at 500,000 units produced, and that's the starting point, where every year they should average out to be 50% per year, and they're ahead of that target at the moment. So because they're ahead, they could grow less than 50% in a year and still average out to be ahead of the 50% compound annual growth rate. Cash, they got lots of cash. Profit, they're profiting fine. Product, Cybertruck remains on track to begin production later this year at Gigafactory, Texas. In addition, we continue to make progress on our next generation platform. Now we got some nice photos. Tesla's operating system enables unprecedented vertical integration, cost control, and agility. And here's a very nice picture of the Cybertruck pilot line. Pretty cool to see the Cybertruck starting to be produced. Another one of the Cybertruck pilot line. Gigafactory Texas, tooling for Cybertruck production line. Cybertruck winter testing. That's a pretty cool pick. Megafactory Laythorpe, California, Megapack body line. 4680 cell production. And some key metrics, vehicle deliveries increasing over time. Key metrics trailing 12 months. We see a nice ramp of vehicle deliveries just continuing to increase over time. Operating cash flow looking pretty good with, directionally kind of coming down. So analysts are not too happy about that. With the price cuts, kind of what you would expect to see. And these charts compare Tesla with the auto industry and the S&P 500 for year-over-year revenue growth. Tesla in red here, looking pretty good in comparison. And the operating margin, Tesla well ahead of the auto industry in general. So basically, these investors are not happy because the automotive gross margin was below that 20% mark. So of course, Tesla shares in aftermarket trading down 6% as we speak at 169.70. I've already put an order in to hopefully pick up a few shares. Hasn't been executed yet, so we'll see how it goes. I put in a limit order at 168. But overall, kind of expected that, we expected the gross margins to be down. What the exact number was, that was what everyone was wondering about because it's below the 20%, as I said. We'll have to check it out tomorrow morning to see if it goes any lower. I'll update you tomorrow morning if my trade went through. Looks like we went down as low as 169.18. So I doubt my trade executed yet, but we'll see how it goes. So that's my update on the 2023 quarter one from Tesla. My name is Evan Bertrand. This is the Evergreen Channel. Thanks for watching.